Hello and welcome to This Week in Markets. Indian equities spent most of the week in consolidation mode, but the undertone stayed weak as foreign selling continued and the market struggled to build any sustained momentum. The Nifty 50 ended the week down 0.8% at 23,366, while the Sensex fell 0.7% to 74,243. The key domestic trigger this week was the RBI policy. The Monetary Policy Committee kept the repo rate unchanged at 5.25%, cut its FY27 GDP growth forecast to 6.6% from 6.9%, and raised its FY27 inflation forecast to 5.1% from 4.6%. That inflation number matters because it moves further away from the RBI's 4% target and sits uncomfortably high within the central bank's 2 to 6% tolerance band. At the same time, the growth print offered some support, with India's economy expanding 7.8% in the March quarter and 7.7% for the full FY26 year. Global cues also remained mixed through the week. Crude stayed elevated near $95 a barrel amid continued uncertainty in West Asia, while the rupee strengthened through the week and ended below the 95 mark after policy measures aimed at attracting foreign capital. But the more important story was the still institutional flow, and that stayed heavily skewed. For the full week, foreign institutional investors were net sellers of 31,114 crore rupees in the cash market, while DIIs were net buyers of 33,933 crore rupees. That gap explains why the market held up better than it might have otherwise, even though the benchmark still ended the week lower. Sectorally, the picture was mixed rather than uniformly weak. Consumer durables was one of the stronger pockets, up 1.7% on the week, and BankX gained 0.6%, while FMCG fell 1.8%, realty dropped 2%. Power declined 3% and metal lost 1.3%. Coming to individual stocks, Titan was the standout gainer among the index heavyweights, rising 4.5% over the week. Adani Enterprises gained 3.8%, Infosys rose 3.2%, and Coal India added 3.1%. The main drags were NTPC down 6.5%, Ultratech Cement down 5%, Bajaj Finserv down 4.5%, and Tata Consumer down 4%. There were also a few stock-specific developments in the background. Anand Raj signed an MOU with the Haryana government to invest 25,000 crore rupees in data centers and cloud services. Wipro raised its stake in Agni Global to 80% through an additional 20% acquisition for $28.5 million, and Zee secured rights to 39 FIFA competitions in India from 2026 to 2034. SEBI's interim order against Rajesh Exports became one of the biggest governance shocks of the week. The regulator alleged that nearly 15 lakh crore rupees of revenue reported over FY21 to FY25 could not be reconciled with the Swiss subsidiaries' audited numbers. The order says the company used inflated consolidated revenues, fictitious or unsupported transactions, and incomplete disclosures to project a far bigger operating scale than the underlying accounts showed. SEBI also flagged possible fund misuse through personal accounts. Rajesh Exports has denied wrongdoings, but the case has immediately put revenue recognition, consolidation practices, and board-level oversight under harsh spotlight. On a technical perspective, the Nifty is in a no man's land. The immediate support zone for the index is seen at 23,100 to 23,050, and a decisive break below 23,050 could open up room toward 22,700 and then 22,500. On the upside, 23,550 to 23,600 remains a key resistance band. So the takeaway from this week is fairly clear. A strong GDP print and steady domestic buying offered support, but persistent foreign selling, a more cautious inflation outlook, and elevated crude prices kept the market under pressure for a second straight week. Looking ahead, inflation will remain in focus. The key data points on radar are US May CPI on June 10, US PPI and ECB rate decision on June 11, and India's May CPI on June 12, with market estimating the India inflation at 4% against 3.5% previously. That's all from our side for this week. Thanks for watching. We'll see you next time, and until then, stay tuned to Fortune India for all the latest updates from the business world.